This is the video for Friday, September the 4th. The reason I think this pullback is not over yet is because it really hasn't satisfied any of the major technical criteria. If we look at the S&P 500, let's start with the Dow, because the S&P 500 is coming off of a high, but a high that was sort of in no man's land between 100 and 127.2% of this coronavirus wave down. So that's an odd place for it to stop. Maybe it's a minor Fibonacci at 114, but regardless, it's not a major Fibonacci. Let's look at the Dow. The Dow never did quite make it to its high, and it started to pull back. The Dow has been the one lagging. The S&P has exceeded the COVID high. The NASDAQ has certainly blown away the COVID high. The tech stocks were on fire. There was a rejection, NASDAQ, of this minor 188.7 Fibonacci. So maybe the S&P did hit a minor Fibonacci up here, but it still hasn't come down to the 50. It still hasn't tested the cloud. It hasn't tested the cloud since May of this year, when it really solidly tested the cloud a couple of times right here after cutting through the very thinnest, weakest portion, thinnest, weakest portion of the cloud. So no technical achievements there. The VIX, on the other hand, this is a 1 day of the VIX, and we have it compared to the SPX, but we did see the VIX jump on September the 3rd, jumped on the 4th, and then pulled back a little bit towards the end of the day. But overall, weekly, this is what it looks like. And if we take a look at the VIX versus the S&P, we had the S&P up here when the VIX was down here in very quiet territory. Then it took a big jump, and it just continued to accelerate. But it took from February the 24th to, well, let's see, we could even say this one right here, March the 16th. So 3 weeks for the VIX to reach its high. And of course for the S&P, that wasn't all. The S&P continued to drop even as the VIX was falling, and then we finally had a rebound. So this is nothing. This is just a little bit of a pullback, a little bit of a move in the VIX. I just think that there's more to come. Apple certainly suffered. The Robinhood traders and other people who loved the stock at $100 and some after the stock split bought, and you know, it was sort of written in the sand that the big guys were going to come in and take the little guys' money. The big guys were not buying when the stock split 4-1. They have enough cash to buy the shares in lots of 100, even at $400 to $500. They weren't being held back. It was the little guys who saw an opportunity to buy 100 shares at $117, and they're the ones that got ripped this week. Now, it did finish up its week of the day, but if we look at it on the weekly basis, started the week here, ended the week here. Doesn't look as good as the daily chart, does it? But this is a big engulfing candle that didn't meet really any criteria. It still hasn't come down to the 50 daily moving average, hasn't touched the cloud since April. Caterpillar, if you watch CNBC, which I never do, but I just caught a 1-minute video of the 4 stocks that they're recommending. One of them is Caterpillar. They just think that Caterpillar and the industrials are poised. Why? Where is the spending going to come from? No idea, but when the spending does happen, and you know, maybe next year there will be an infrastructure bill instead of handouts for, I shouldn't say handouts, that's terribly wrong. Instead of COVID payments, there may be an infrastructure bill to get people back to work. And Caterpillar would benefit from that, but it doesn't mean we still can't have a pullback in the meantime as it's continuing this pretty strong move up. Home Depot, I'm really sorry for saying handouts. I really did not mean that word. Home Depot, again, no technical reason why it pulled back off of this low, but it did end the day right at the 50 moving average. That's the only stock that we've seen with something bearing a technical reason for why it ended where it did. Still hasn't tested the cloud like the S&P. It did move through the Ichimoku cloud at its thinnest point, and that was the last time, again, end of April, third week of April, when it came to when it touched the cloud. Look at where the Chiku span is. We did get the Chiku span at some point on Friday below this candle, but it did bounce back. We've got a very small line of candles here, and we're going to look to see if we can get support for the Chiku span on that ridge of candles. That's Home Depot. AT&T has just been in a 50-day $1.25 channel range. Still a great stock. Love the dividend. Not even tempted to sell any. I don't even have short calls covering them anymore. The banks apparently had a pretty good day. Let's take a look on a weekly basis. The banks had a green week. Bank of America had a green week. Goldman Sachs had a green week. JP Morgan, US Bank had a green week, but it's, they're sort of channeling. Bank of America is doing quite nicely, moving up here. So is Goldman Sachs in a channel now. JP Morgan certainly in a channel for several weeks now. Waiting to break out, maybe keep an eye on the banks. They might be a place for safe haven because they've got some pretty decent 2.5% to 4% dividends. So I still think we are not out of the woods yet. If you've been holding Tesla, you saw just what the Apple traders saw. Again, it hasn't come down into a healthy range in that split down to $500. I mean, it's not inexpensive, but you still have the Robinhood traders who really aren't risking any money. They can buy a fraction of a share. They can buy one share. They can buy half a share of Tesla. They put $100 to risk, and they're buying 20% of a share. But they've only got $100 to risk. Don't let volume influenced by the Robinhood traders influence your decisions. I still think we have more to pull back, and I am looking forward to it.